Welcome to Lesson 11, Part B. We are going to talk about a key information document whose acronym is KID. Let me say that this document is meant to recap the prominent metrics delivered by the analytical modules discussed in the previous lectures, plus some additional analytics. Let's begin by acknowledging which sections the key information document consists of. First of all, the financial instruments involved are characterized. In the MASASP combination, for instance, we have just the US stock index and the gold. The KID says whether a position on these two instruments is held through ETFs, futures, contracts, or derivatives of other kinds, such as contract for difference. Then we have the equity curve section, which shows you how much the equity invested on this product has grown in the past years thanks to the accumulated profits generated by the investment product. Then we have the underwater curve, which graphically describes the riskiness of the investment product in a very effective way. At last, we have the risk performance metrics, which provide more refined analytics intended to complement the curves mentioned so far. Well, these four sections are what the KID is all about, as far as the MASASP minimal combination is concerned, because this MASASP system is implemented by the investor himself by simply acquiring the software and connecting this software to his trading account. Quite the opposite if you go for an alternative investment product, a third-party investment product, such as an hedge fund, a mutual fund, an SGR, a CGAP, a CGAP. In that case, you will find in the KID an important section regarding the governance of the issuer of the investment product. Besides, as you are supposed to give your money to the issuer, you need to go through an additional section that tells you which financial regulatory system the issuer has to comply with. At last, you will find a cost structure section, which tells you exactly how the issuer of the financial product is rewarded. And the issuer reward is a cost on the investor side. The cost structure entails the expense ratio as long as ETFs are concerned. In case of a closed-end fund or of a hedge fund, instead, you will find some other expenditure items, including the fixed fees, the management fees, and the likes. Well, after this general introduction to the KID as a whole, we have a chance to dig into the MASASP-specific KID. We have 2 pages in it, which are pretty much the same, except that the calculation method differs a bit. But they look pretty much the same. Let's have a look at it. We have the equity curve. At the bottom, we have the underwater curve. And then the risk performance metrics. There is not much to say about the curves. Instead, it is worth to recap the meaning of the acronyms found in the risk performance metrics section. We have here the annual return, the terminal wealth relative, TWR, the historical volatility, sigma, the maximum historical drawdown, MHD, the value at risk, VAR, the expected shortfall, ES, the risk-adjusted profit, RAP, the beta, the Sharpe ratio, SHR. And at last, the observation period measured in years. Here with MASASP, we have as many as 12 years. The longer, the better. Well, let's see then what this KID looks like for our 4-system combination considered as an absolute return investment. WBMK stands for the weight of the benchmark. 0 here means that there is no asset quota allocated on the US stock index ETF, which is qualified as the benchmark. Well, let's dig into this 4-system combination. First of all, we appreciate here the equity curve, the blue plot. It is very smooth indeed, which means that the profitability of this system is quite constant across the whole observation period. In this equity curve section, we have also a cyan plot which refers to the benchmark, in that case to the US stock index. You can see here that the blue plot is always above the cyan plot. That means that the MASASP combination systematically overperforms the benchmark. In this equity curve chart, we have a third plot, a green plot, which refers to the adjusted profitability. It refers namely to a system whose profitability is assumed to be equal to the risk-adjusted profit, to the RAP. As the MASASP combination is less volatile than the benchmark, this third equity curve is even better. Let's see now what happens with our 4-system combination when it is operated as a benchmark product, meaning in conjunction with the long position on the US stock index ETF, indicated as SPY. WBMK, which stands for the weight of the benchmark, is equal to 0.5 here, meaning that 50% of our assets are allocated on said ETF. The remaining 50% quota is allocated on the MASASP combination, resulting to underfunding, the policy treated in lesson 7. That means that the facial value of the positions opened by the MASASP combination at its peak might be the double of the equity allocated on it. Of course, adopting this underfunding scheme and holding a position on the SPY, the overall profitability improves. It has upgraded from 16% to 20%. That is obvious because we added to the MASASP combination the returns generated by a half-size position on the US stock index, which has grown across the years, and it is expected to do so in the future as well. But the thing to remark here is another. Look, despite of the big SPY volatility, the risk-adjusted profit, the RAP, has improved too. That stems from the fact that combining the MASASP with the US stock index provides a benefit in terms of risk-return trade-off. That is the benefit of the diversification that we have discussed in lesson 10. In the second page of the KID scorecard, we have the compounded scorecard that refers to the compounding assumption, meaning that at the end of each year, we increase the notional value to be invested by our system, aligning this value with the equity at the end of year, which is higher due to the profits delivered that year. This policy dramatically improves performance in terms of TWR, terminal wealth relative. We have, in fact, a TWR of 8.53 instead of the 3.54 that we had in the previous slide. This improvement, though, comes at the cost of bigger drawdowns, especially in the last years, as in the last years the notional value of our investment is bigger. Needless to say that the compounding policy can be implemented in different ways. One might also decide to compound just 50% of the annual returns in order to stay on the safe side and in order to retain an equity buffer to absorb possible drawdowns. Well, that's all with regards to the KID component of the MASASP methodology. That's the last component of said methodology. Hence, this short course terminates here. Thanks for watching and follow us on the MASASP YouTube channel. Bye!